Hey, I was forced to come back to the garden because of the whole asparagus drama, which, as Cunningham's law states, if you want a lot of responses on the internet, just make a wrong statement and loads of people will correct you immediately. And my appeal for knowledge of asparagus yielded record feedback. So we'll talk about that in a second. As the week goes, it was, yet another fascinating week in oil. There's obviously the Fed drama. I thought Powell would be hawkish. He was dovish. Everyone gets chopped up on the wrong side of that. Market rips in everyone's face just when we thought, inflation was sort of proving to be sticky and ultimately would cause interest rates to have to stay longer higher. You kind of got the opposite language from the Fed, and everything that was working in our favor, which was, the oil's outperforming the market, suddenly reverses, and next thing you know, oil's down $7 a barrel or whatever it is in a week. But we've kind of held on the dollars a barrel, and I think the market's not grotesquely oversupplied. It's just struggling to price the Israel-Iran risk, which we don't think is that great a risk, because as we keep saying, the Chinese are standing behind Iran with their arms crossed, waiting for their oil deliveries. So the potential for disruption in the oil market from the Israel-Iran situation is basically limited in my view. Now, of course, if the US was to decide that, for example, they wanted to be nice to the Saudis and stop Malaysia smuggling Iranian oil into China, at the moment Malaysia has a higher exports to China of crude than it produces. It's like over 1 million barrels a day of exports to China, and it only produces 600,000 barrels a day full stop. So it's obviously smuggling Iranian oil. And the US is pretty obviously turning a blind eye to that because I know about it. So I figure some dude in the CIA has worked it out. So if the US is going to crack down on that, for example, as a favor to the Saudis, then, Iran might start playing silly buggers, let's say, in the oil market. But for now, they're just supplying China, and they can't really mess around with that because they need the revenue. So it's kind of not surprising that $5 came out of the oil price on lower Israel-Iran risk. And, we had all along said that, by the way, these guys have been basically at full-scale war for 20 years. So the situation is not dramatically different. It is in Gaza, obviously, and that's terrible. But the reality is the Israel-Iran at each other's throats is not a new thing in global geopolitics. And therefore, that risk has come out of the market, basically. Now, having said that, the Saudis are holding pretty good control of the market. Keep in mind there's an OPEC meeting coming up here at the beginning of June, so we're going to start getting the chatter about what they're going to do. And it's pretty imperative, I think, based on market action, that they roll the cuts. I think if they add back in or don't hold the line, the market's not going to like it, because there's plenty of evidence of slowdown. And today I've been looking at US distillate trade, just trying to get a better handle on global distillate. It's always been one of the holy grails of oil market analysis. The one holy grail is always NGLs, which nobody knows where they come from and nobody knows where they go to. I'm not kidding. And the other one is distillate, which we kind of know where it comes from, but we really struggle to know exactly where it goes, because essentially it's loaded onto tankers and the traders don't really want to tell people what they're doing with it. And when it's unloaded in the country of destination, who knows where it all goes in terms of whether it goes into a power plant, a factory, a train. It's very difficult to know. But it is the driver of the global economy, and we saw it, turn down massively with COVID, less so gasoline, and you expect it to trade economically. And so the weakness that we're seeing in distillate is quite interesting. Now, having said that, you're also getting some strength in distillate because you've got major issues in Russian refining, 600,000 barrels a day of refining capacity out. And you can see distillate is being sucked into Europe actually from the Gulf Coast, which is probably helping Gulf Coast margins. And so the bigger impact, rather than Israel-Iran, has always been Russia-Ukraine on all these oil markets. And that situation with the drones, I think, is having a material impact as we head into summer. So that's that. And then, of course, we had, talking of OPEC, all the interesting stuff around the Exxon Pioneer deal completing, and the shock news that Sheffield, the FTC, et cetera, et cetera. And, that's a tough one. I mean, Scott should highlight that he was the guy that got us to lift got the DC to lift the crude export ban, and he was always a free trade in oil kind of guy. I think he was acting in American best interests when he was trying to protect the industry and the downside, et cetera, et cetera. So I think it's unfortunate, but if you look at some of the language that you see in terms of talking to OPEC, it does read badly from a competition point of view, it has to be said. I think it was not his intent, but it just looks bad now with 5 years hindsight in terms of OPEC being a cartel and stuff. So that was an interesting one, and everyone was calling, of course, to know whether it would have an impact on the Hess Chevron deal, where, you know, the market view, the market has no conscience, was simply that the fact that the FTC has approved this deal with only the Scott-Sheffield proviso is very good news for all deals that are currently pending, and there's a few. A good example would be Diamondback for Endeavour, but of course the big one is Chevron for Hess. Now, at the same time, the language continues on how long it will take to do arbitration for Chevron Hess, with Darren Woods this week raising the prospect that we could be into 2025 on getting an arbitration decision, and that is confusing for Hess shareholders. They have to vote for the deal basically at the end of this month. So, you know, that's an unusual situation where you don't really know what you're voting for, quite frankly, because you've got the uncertainty around Chevron's share price and the uncertainty around arbitration. So, interesting times on the M&A front. A theme company that's come up from various discussions basically about natural gas is actually EOG. And it was simply that I was observing that the market is very willing to buy the natural gas names. It's been ripping the natural gas names because natural gas is so cheap. It's not that counterintuitive when you think about it. And we've seen this before. They did it at the beginning of 2023 as well, and that was too soon. Now they're doing it at the beginning of 24, or at least some way into 2024. Everyone's buying the gas names on the basis that, you know, here comes the LNG, which we don't think is going to come till 26. And notwithstanding the fact that we think that all this curtailed production in US natural gas is spare capacity, so it's essentially an overhang on the 25-26 market. And the observation was simply that, isn't it interesting that people sell EOG because it's said to be becoming more gassy when it's really still majority oil, albeit more like 50% everything else. But the market hates the fact that EOG becomes more gassy, but loves the fact that EQT is gassy, so it's somewhat perverse. But I was speaking to a major shareholder, and we did agree that EOG has kind of messed up its cash return policies, and, you know, probably, I think, in my view, needs to raise its hurdle rate even further to underline how far ahead it is in terms of return on capital employed, and with no cash, with no debt on the balance sheet, basically step into much bigger buyback. It did actually return 100% of its free cash flow last quarter, but I think it slightly got tangled up in the whole sort of Devon Pioneer race for the highest special type year, and I think the company that did the best job of holding the line and being very specific even when it was unpopular was actually Diamondback, which just resolutely said, we got a framework here for buyback and we'll not do it when we think the stock is expensive, which is again a very perverse argument, but one which works over the cycle. All you got to do is identify where the cycle is. Not that easy. So this week's kind of quiet for results. The refiners have been disappointing performers out of results, but I think everything's fine in refining actually, even though we are a bit worried about demand. I think the supply side issues, particularly in Russia, Nigeria is not getting that refinery started. Mexico can be relied on not to run refineries well. I think the structural story in refining remains very powerful. And this short-term sell-off we've just had here from Q1 results being a bit disappointing across most of the names, with actually the most shorted name, Delec, ripping. It's fairly classic noise. Valero's just put out a new slide deck, for instance, and to me that's a best practice example that I hold up to others. In fact, I told the EOG shareholders, send it to the management of EOG and tell them, this is how you make a great presentation from a great company, and that's Valero's latest presentation, which just hit the web. Okay, I'm going on too long, and I've got to talk about asparagus. Let's get over here. The garden is going well. It's incredible in New York, actually, how it's really bad in the Hamptons, where it gets just so dead in the winter, and then it goes nuts in the summer. So this is the celebrated asparagus plant, and I couldn't believe. Now that is one asparagus plant, and basically what happens is, first year it shoots like crazy and you leave it. Second year it shoots like crazy and you leave it. Third year you cut it off right low. Once it's a spear, because it's a single spear that then makes loads of spears. And from then on, for years, it will give you 3 or 4 spears. Just one plant, one spear, but 3 or 4 times a summer you'll get your asparagus spear. And then all I need to do is cover this entire garden with asparagus plants, and I can be into providing myself with way too much asparagus. All right, have a great week.